Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about Dominoes Pizza. And the key thing that we're going to be looking at here for Dominoes is their earnings this upcoming Thursday. As you can see that despite the fact that the market overall was up today, we actually saw a decline in the Dominoes Pizza stock price, and that was really coming off of really high caliber, long extended periods of growth in the stock price. And I think that this is going to continue to be volatile leading up to earnings announcement this Thursday. So today what I want to talk about is kind of our expectations surrounding earnings. And as you can see, it is very, very high. So one of the things that we're looking at for Domino's in particular is how did they do in a quarter as restaurants continue to open back up? The second thing is, what is their outlook going to be going forward? And as you can see, there's pretty aggressive growth models in the Q4 side for both the end of this year as well as next year. But pretty much all the other 3 quarters are staying flat, even year over year. And granted, this is just the EPS side. But what we're really going to look at is if they can maintain earnings at the same period of time that they are aggressively growing the revenue side. So what we're looking at this week is we're expecting to have a consensus estimate of 277, and that range is as low as 245 and as high as 313. That is not a small range. However, this is a stock that's had a lot of moves based off earnings. So we definitely want to be watching it. The charts that we're going to look at now is going to show the year to date, and I've already included some of the earnings that we've seen here. The key one that we want to watch is going to be year over year and the big change that we saw in February of this year. To show how large of a jump this was, and you can see that it was basically a $60 jump, I want to put that on the 3-year line to showcase that this is a stock that's been absolutely killing it over the past 3 years. But the key item that we want to look at is on a much shorter scale, which is going to be the year to date. This announcement right here came about as a result of they had excellent earnings, a huge growth in revenue, and the big plus that Domino's had going into this calendar year and into the coronavirus pandemic is that they already had home delivery on lock. They were a lot farther along from a user experience in terms of how easy it was to order online or their app and how soon they could get it to you versus a Pizza Hut, CC's, or some of the other pizza chains, or even just some of the regular restaurants that were having to utilize Uber Eats or Postmates or some of the other delivery services, and that was eating into their cost. Domino's was already doing a very good job here. So you can see already that the stock price has continued to climb higher, and then after they had hit an all-time high this past week, we're now seeing that kind of level out. So there's kind of 2 different ways that this can go in terms of what we can expect going forward. As you can see again, the stock price has continued to change pretty dramatically. Let's see if we can get this to be a little bit closer. You can see some of the moves going up and down as we go into next week, or rather into earnings. And what I'm really going to be looking for is, do we want to either play a put credit spread? So what I'm looking at is I'm going to be bullish, but I don't want to play the call option because the premiums are very high. But rather, if we can look at where they're going and say, instead of playing that call side, I'm going to just sell premium maybe around the 400 mark, which they haven't been in the past 10 days. Or do I want to actually play the call? The issue here with playing calls is, as you can see here, they're going to be very expensive. I want to highlight that these are the end of the week. And so the stock currently sits about 425. For me to say that's going to move to 530, you can see that on the call side right here, the bid and the ask spread right here, the difference here, we're looking at $1,208 for a $5 move. So this is saying that the stock is going to move by $12, not by $5, which is pretty aggressive on a stock like this, particularly when it doesn't traditionally move that much except around earnings. A lot of the volatility that you see in this chart is a lot of overnight moves, not necessarily during the day. So we're going to be looking at this, and I'm going to be watching it. I don't like to pay that much money, and frankly, I'm not going to pay over $1,000 for a move like that. Granted, I could go much farther out, but the issue is that it's just all very volatile around earnings. So even if I go out to like the 30th and I am looking at some of these farther out of the options calls, then I'm still going to have just a lot of premium to pay. I mean, even here you can see the 4:30 call for the end of the month is presenting a lot better bid than what we were seeing at the end of the week. Again, $1,200. I'd rather pay the extra $1,500. Or what you can do is actually sell that amount and hope that it just doesn't go below. And again, that's an option that we have available to us. One of the different ways that we can evaluate a company going into earnings is just some of the historic growth and share details. From a growth perspective, you can see that information here. They are absolutely killing it. And I think that this is a great stock to own in your portfolio, and I would hold it. I wouldn't necessarily buy it at this price. And you can see that price performance chart here on the top right-hand side, where again, we're looking at a 5-year change. And again, they're just absolutely killing it with a lot of that growth coming in the past 3 years, and particularly this year. What I want to look at, though, is going to be the income statement side right here, but in particular, the revenue. So you can see that all these metrics going up is excellent. That's what I like to see. I think that they're in a very good position going into this earnings. What I'd really like to see, though, is what do revenues look like? This chart right here, is this going to continue, particularly on the quarterly basis? You can see here that the quarterly or the quarter over quarter revenue is not changing dramatically in Q1 of this year and Q2 of this year. What I'd like to see is this Q3 number kind of split the difference between Q2 and Q4 of last year. Q4 is the big one. Again, as it gets colder, as people don't want to go out, they're going to order pizza. You have family over. The holiday season is always good for the pizza chain. So that's what we're going to be looking at in the information right here. This is what's going to be make or break. As far as the actual valuation in this industry goes, I think that Domino's is already going to be at the very high end of a lot of people in this industry, because as you can see, we're going to have hotels, restaurants, and leisure. And none of those three are doing very well under current conditions in a lockdown state. Rather, what we can look to is how Domino's is performing, and you can see that there's trading at a high ratio from a price to book perspective. They are trading at a high level from price to sales, and they're only mid cap in the price to earnings. I think that all of this is an interesting time to be looking at these metrics, because again, Domino's is actually doing very well where most of their peers are not. And you can see that really represented in the profitability metrics right here, where I think that Domino's is actually maintaining these metrics where a lot of their peers have fallen off. The other reason I would highlight that you should hold this stock is, as you can see, the yield has dropped pretty dramatically from where it was, and it's actually lower than the industry average at this point. And this has not been the case traditionally. Again, Domino's has had a higher yield, but with the stock price skyrocketing, they haven't said they're going to increase the dividend. And that while that may be something that comes about as a result of this quarter earnings, I don't expect it to be, although I'd be welcome wrong on that. So you can see just some of the metrics. They're continuing to do well. They have not a lot of debt, and I think that they're going to be in a good spot going forward. I'd like to see a little bit stronger financials, maybe turn some of that revenue into cash balances or investment balances. But again, they're continuing to perform very well. From an analyst report perspective, you can see that they have very favorable ratings across the board. Again, everyone is saying they like it, it's good, but they're expensive. I think something that could be a game changer is if they came out and they said that they're going to do a stock split. And we saw this with Apple, we saw this with Tesla. Even just off the news about it, Chipotle stock actually skyrocketed another 3 to 5%. So if something like that happened, I think they'd be in a really good spot as well. But a lot of people like the company, and I think there is a lot of value associated with it. Lastly, I do want to highlight how they're performing against some of these other competitors. You can see that Chipotle, the company I just mentioned, they have not been able to capture as much of this growth as Domino's has, and that's across the board. Wingstop is another company that did very well through the coronavirus pandemic. The key for all of these companies is going to be what now? What happens going forward? And that's what I'm going to be watching, is how well do these companies perform on a go-forward basis, despite the fact that outlook is still tenuous and we don't really know what the final push is for. So all that being said, what I'm going to be looking at again is I like the idea of put credit spreads below $400, which is not represented here. I also like the idea of call options, but it would really need to move, and I just don't know if that's going to be the case. So put credit options potentially farther out is going to be the move. Again, I'm going to be looking at this probably the day of, just because I think that the stock is going to continue to move a lot. You can even see right here that it's moved north of 430 to from all-time highs. It dropped down even today, $8. So this is a single day move. If I'm going to be playing it, I want to be a little bit closer, and we're not necessarily going to see as much time decay because there's going to be increasing volatility. All that being said, I like the idea. I like the company. It is expensive though. So if you have a comment that you'd like to share, please drop that below. And if you found this helpful, please leave a like and subscribe. Thank you, everyone.